This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the pressure is on China to revive its fast-slowing momentum. First, however, this week will bring some key American data covering durable goods orders and PCE inflation data on Friday New Zealand time. New and pending home sales and the Conference Board's Consumer Sentiment Survey result on Wednesday New Zealand time. The US Fed will also release its annual stress test results on Thursday. We'll also get key inflation data from the EU, Canada, and importantly from Australia on Wednesday. The Westpac Melbourne Institute Consumer Confidence Survey will also come out this week, tomorrow in fact. Finally, look out for some key Japanese data on Thursday, especially on retail sales and industrial production. Over the weekend, China said it attracted virtually no more foreign direct investment in May than in April, in an outcome that will probably alarm Beijing privately. It is still flowing in at the rate of about $50 billion per month, but that is now holding at that level. That puts the May FDI level 28% lower than the year-ago level in a trajectory that is as tough for them as the depths of the GFC. And it is probably going to get tougher for them, especially for important tech. And it isn't getting much better at home for investment. During the first 6 months of this year, the total value of mainland Chinese IPOs has plummeted 84% on the year to just 33 billion yuan, that's 7 billion New Zealand dollars. While only 44 companies went public, down 75%. In any other market, this would be called a crash. It is no surprise, then, that the Chinese yuan is weakening, especially against the US dollar. And the early versions of the Japanese PMIs reported gains in their factory sector to a modest expansion, but a fallback in their services sector to a surprise, although tiny contraction. Meanwhile, Japanese CPI inflation rose in May to 2.8%, up from 2.5% in April. But food was up 4.1%. In India, their early PMIs rose to faster expanding levels in both sectors. And the monsoon has arrived in India, taking some pressure off its heat and water stress, although not yet in parched northern India. In the US, the first of their June PMIs are in, the internationally benchmarked versions. Their factory sector PMI rose, but still at a modest expansion and a 3-month high, and their services sector PMI rose to a good expansion and a 2-year high. Both were on the back of rising new orders. Making this a bit more impressive is that cost inflation was much lower in both sectors, and business confidence in the immediate future, that's for the next 1 year, it rose. And they report for the first time in 3 months, companies plan to expand their workforces. In what might seem a bit of an irony, the Conference Board Leading Index in the US was released over the weekend and it retreated. But it was for May and isn't reporting on the same period as the June PMIs. It's a leading index that trails current data. Also for May, American existing home sales fell 0.7% from April to a seasonally adjusted annualized rate of 4.1 million units, the lowest in 4 months. The decline comes as the median sales price climbed to a new record high of $419,000 US dollars or 685,000 New Zealand dollars. Meanwhile, unsold inventory sits at 3.7 months supply at the current sales pace. Interestingly, if you match the housing sales level between the US and New Zealand on a population basis, they will sell about 64,200 houses in a year on a New Zealand equivalent basis. Over the past year to May, we have sold 67,400 houses. Both markets, though, are in the doldrums. Retail sales in Canada are projected to have dropped 0.6% in May compared to the previous month, according to a flash estimate. This would represent the steepest decline since March 2023. Such a decrease would offset the 0.7% surge in April, the largest in a year. And Canadian producer prices rose 1.8% in May, their fastest increase since January 2023. In the EU, their PMIs show their recovery is slowing in June as new orders fell for the first time in 4 months. Their huge services sector is still expanding, but their factory sector is contracting at a slightly faster rate. The US Treasury 10-year yield is now 4.26% and unchanged from this time Saturday, and the price of gold will start today also unchanged at $2,320 an ounce. And oil prices are unchanged from Saturday too, at $80.50 a barrel in the US, while the international Brent price is just on an $84.50 a barrel. And the Kiwi dollar starts today unchanged from Saturday at 61.2 US cents. Against the Aussie, we're marginally firmer at 92.2 Australian cents. Against the euro, we're also marginally firm at 57.3 euro cents. That all means our trade-weighted index starts today little changed at just on 70.9. And the Bitcoin price starts today at $64,070, and up a mere 0.1% from this time Saturday. Volatility over the past 24 hours has been very low, at just on plus or minus 0.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.